Next up is cost and financing to capitalize ACE and to get it going. There's 4 phases that we've identified. Phase 1 is beta testing, which has already started now, but once funding gets into place, this would go to the next level, so to speak, and we'd expand that quite drastically. Phase 2 is when Ontario, BC, and Atlantic EDOs come on stream. Phase 3 would be everything in Phase 2 plus Manitoba, Saskatchewan, and Alberta. And Phase 4 would be the territories plus some other ideas, maybe municipalities or something other than First Nations that we could utilize. Now, this could be accelerated. For example, maybe Manitoba comes up into Phase 2. We'll see how it goes. But right now, this is how we see the phases unfolding. So the startup costs in Phase 1, total costs add up to $275,000, and that's based on developing website content, developing a website, the software that's needed, the marketing, the equipment, management, and development. So a total of $275,000 to get ACE up and running. As far as the financing goes, we're looking at 2 primary sources, ANSI of $150,000, and then another either federal or provincial contribution of $125,000, so that totals to $275,000 as well. And the partners have already and will continue to contribute a number of tools and resources and content that have already been developed or that will be developed. So Phase 2, 3, and 4, cash flow from operations, just to point out, will help fund the future phases. So you'll see in year 2, ACE starts to develop enough cash from operations that it can be reinvested into the company, so there's a less reliance on outside funding as we go forward. So in Phase 2, for example, external funding would be $127,500. Phase 3 goes down to $93,000, and Phase 4, ACE is totally self-sufficient, and based on the projection, should be able to sustain itself. In terms of the market, just a brief partial survey that we did at an Ontario EDO conference a little while back. And are you in favor of developing the interactive ACE website? And 91.5% either said definitely yes or yes. I can't remember what the real distinction is between the two, but there was a big positive need or interest in ACE, and then a few other people said maybe. So the target market that we're going after are EDOs, Aboriginal capital corporations, tribal councils, financiers such as banks, funders that are out there. That could be the foundation people, that could be government funders, professional people, whether they're consultants, lawyers, engineers, accountants, somebody who's got an interest in First Nation economic development. There'll be government members from various provincial and federal governments, and we're also trying to encourage First Nation communities to get licenses, and not necessarily basically the non-EDOs. And I think there's value in the more traffic, the better, more value for everybody in this site. But I think there will be a lot of value for non-EDOs. We talked about horizontality before and other players in a First Nation. I think Chief and Council could benefit from this as well. There could even be, or there will even be, training for Chiefs and Council geared towards economic development, and there'll be training for boards of directors and that sort of thing. And then, of course, there'll be the corporate sponsorship. We're looking at an overall capture rate on average of 37%. So of the people or the organizations, people that we've identified, we're shooting for 37% to make these projections work. There are 2 basic revenue streams. There's membership fees, and then there's sponsorships and advertising from more of the corporate side. So the way we've structured the licensing, it's designed to maximize site usage. We want to encourage as many people to go onto the site as possible, to increase traffic, and that'll provide more value for the members and the sponsors. The membership fees and licensing strategy, you'll see here, if you buy 1 license, it's $1,250. 3 licenses, $1,500. 6 licenses, $2,750. right up to 20 licenses, 7,500, and that could be a larger organization like a government organization or a TD Bank, for example, who's expressed an interest in joining something like this. So the more memberships you get, the more licenses you get, the lower the per license cost gets. As far as the sponsorship and advertising goes, we got two types of sponsors and advertisers. We got supporters and partners. Supporters are more let's start with the partners, are more the people who help to more like the founding partners, I guess you could say, of the site. That could be, a bank, that could be government, that could be a number of organizations who are helping us get this off the ground. There's also supporters who are more the typical advertiser. Now, the difference between supporter and partner, based beyond what I've said already, part of it would be the placement and frequency of advertising. Another big part would be access to membership. Partners would have a lot more access to the members in terms of workshops and conference calls and that sort of thing. They'll be able to present to members more frequently. They'll attend membership retreats, and we talked a bit about that before, I think. This is where we physically go away with a group of members and sponsors, advertisers, or sponsors, I guess, the partners, and work on something that, some sort of project or projects that are of major interest to a community. So as far as the sponsors and advertisers go, there's the supporters and partners, and within each category there's gold, platinum, and diamond. So 3 subcategories within each category, ranging from $2,500 to $75,000. And what that gives you, we've already talked about before. So based on our projections and our capture rates and what we think is going to happen, we're looking at total in year 1 after the beta, total memberships of 211 people, or 211 memberships, which is equivalent to 799 users. Year 2, 289 members, 1,000 users plus, and in year 3, 299 members, and then slightly more users. So the idea here again is to encourage, through the licensing, to encourage more people to use and come to ACE. Our marketing plan is, we've already started establishing an ACE corporate branding. We've already got a base of beta testers, which we want to expand as we move forward. We're going to gain testimonials. We're going to continue to develop the website. We're developing a promotional video of 5 to 10 minutes so somebody can get, instead of sitting through this 40-minute presentation, they get a good sense of what it's all about. We'll have membership drives and sponsorship drives. As far as the competition goes, there is competition for some aspects of ACE. There's a ton of stuff on the internet about business planning and a lot of static information. However, we think ACE is really targeted towards a very specific market, and there's nothing in the market that would provide this level of live attention, tools, resources specifically geared towards an EDO and people in that field, as well as the live support, as I've mentioned. And I don't think that is out there anywhere else, and it's not based on our research. Our financial projections for the next 3 years, I'll just give you total revenues and expenses. Year 1, we're looking to basically break even, and that includes Ontario, BC, and Atlantic Canada. Year 2 is where it starts to generate more of a profit, and as I mentioned before, part of that profit is going to get reinvested into the company for future expansions, so it'll decrease the need for external people to fund this. So year 2 is going to include Manitoba, Saskatchewan, and Alberta, plus the people that we had in year 1. And then finally in year 3, we're going to add the territories and possibly some other, we're not expecting a lot by way of projections of new people. I think an opportunity is there, but we haven't really included it in the numbers. But there could be an opportunity in the United States for similar types of markets or municipalities perhaps. But the bottom line is it generates a profit of $166,000 at the end of year 3, and that gets back, a lot of that goes back into the company to reinvest. And then beyond year 3, this should be self-sustaining.